Good morning, everyone. It's still morning out here in California. This is a quick little update. Today's the 15th of January. We're looking at an SPY chart. Wanted to kind of highlight these patterns. As we move through this cycle rotation here, we're moving into kind of a topping pattern on the 6th, followed by a base pattern on the 13th. You can see right here, moving into a topping pattern on the 18th, followed by a peak pattern here on the 20th. Then we move into this kind of a breakaway phase into strength here around the 20th. Then we move into a breakaway phase into a V bottom on the 9th. And then we get this peak major bottom and then major bottom on the 10th and the 21st. So now, highlighting this for everyone, I'm going to come over here and go all the way out here to the beginning of March, and let's highlight some of this. So on the 10th and the 9th and the 10th, we get this major bottom and this V bottom. I've already kind of drawn that into this area here. I will redraw it again because I want you guys to see what's going on. So the 9th and the 10th is right here. So I'll come in here and I'll draw the V bottom kind of like this. And what I'm going to do is I'm going to just mark this in bright red. So this V bottom setup here may be anywhere in this area, anywhere, because we're into this kind of a rolling zone here, but I really do think that it's going to come down here right into this buy zone again. And again, this lower level, this 576 to 580 area is acting as fairly strong support right now. And we move into our major top formation up over here, which I've already highlighted, could be as high as up here into the 610, 608 area. But in reality, we have this zone right over here. And this is my marking for the major top, this blue line. I think we're going to be moving kind of in this area, 598, maybe up into the 600, 602 area. So if I were to kind of tell you where I think it's going to be, I think it's the major top is going to be right up in this area here, kind of setting up a topping pattern right around here. Okay. It makes sense to me that we're going to be moving into a topping pattern, but we're going to struggle to get back above these highs back over here, coming off this first pullback zone. And we're going to likely move into a fairly solid kind of a flagging pattern that I've already drawn this morning. So again, we do end up having the major top pattern right over here in this area. And we're likely looking to try to sell into this potential topping pattern, as I believe we're going to see this move roll into a downward trend. So I think we're going to move into a sideways topping pattern and then breaking down into the deep V, coming back up out of it. And then look what comes next. So after the deep V bottom, we move into the 23rd with a disruption, 24th. That's right after the deep V bottom. We move back into strength. We move into a breakaway in early March. We move into disruption, and then we move into another bottom on March 21st. So now we come back over here, get rid of that. Drag, nope, get rid of that. Drag out over here, March 21st. Right here, we move into another bottom. So we will likely move from the deep V bottom back into potential sideways trading, moving back kind of up into this range again, and then move into a base bottom here. Now, why am I picking these low areas? Why do I continue to pick this lower area And why do I kind of continue to pick on this channel? Well, I do believe that we are going to be struggling to move sideways at the beginning of the year. I do believe that we are going to be moving through a series of up and down waves, meaning after we get these bottoms, we move back into strength, and we could move, all the way back up into this mode here, meaning we still have the ability to move all the way up into this upper channel before rolling downward, and that's very likely. Okay, but what's happening here is we're rolling into this channel, setting up kind of a excess phase peak pattern. And let me show you back over here. We'll come over here. We'll go to 4 hour. We'll go to the SPY. Get rid of those charts on the bottom. Oops. Get rid of this. Get rid of all my drawing. And now, where are we? In fact, let me go to weekly. So as we move into this pattern where we're getting this basing and we roll up potentially into the January 20th high, what we're looking at is a fairly solid kind of an excess phase peak pattern. Okay. And if this rolls and comes down, remember, we could, like we saw on Bitcoin, we could roll off of this level, retesting this level multiple times before attempting to move on up. Now, secondarily, we could also be moving into, which I believe is highly likely, a downward type of megaphone pattern coming across this area, potentially moving through this sideways zone. So if we get a breakdown over here of this excess phase peak low, we're likely going to be coming down, finding support in this area, and then rolling back up through the second half of the year. And I think that's going to be kind of more of a staged move like this, moving back upwards. Okay. So where we're at, let me redraw this. If we do get that breakdown coming off of here and breaking down, we'll reach consolidation and then start to roll higher. And consolidation, as I mentioned to you, is very likely going to be around this 5-0 level that I'm drawing right here. And also we can see here that is actually very close to the 382 level here as well. So see the 382 level, I'll draw a line. This is the 382 level. And if we move this up to here, oh, it's already there. And this is the 5-0 level right here. So you can see that those levels, I think, are going to play a very critical role for finding support for the SPY. I think really that, we're moving into trending. I think we're going to struggle into the inauguration. I think there's going to be a lot of sideways movement. But as I mentioned to you, the crash index over here is moving strongly upward. We've moved literally, this is daily. Let me go back over here to weekly. And we've moved literally out of this sideways trend, this pullback anomaly event, into this flagging formation. And again, if we were to get a flagging excess phase peak pattern moving in this area, we would be looking at a pullback. Sorry, guys. We would be looking at a pullback back down to this area, trying to struggle out of this mode, or potentially a little higher, depending on how it plays out. But I don't see this as a breakdown in the market. I really don't see this as a breakdown yet in the market. We've moved back into trending. So now I don't think I have it here. No, I don't have it here. Let me come back over here and get what I'm looking for, which is the smart money index. Looking. 1 second. There it is. And the smart money index clearly indicated last week that we're moving into that trending mode right here. This moved us back into trending, which means that we were likely going to see some sort of a move to the upside here. And that move to the upside was going to be more like this. Very similar to what we had here, moving back to the upside, and here trying to trend back out. Very similar. So we're getting that same move. And now, if you take a look at the SPY on a weekly chart, cancel that, move back out over here, move back over here. Look at that big move. Look at that big volume move setting up, just like I showed you right here. We're getting that same type of bounce and rotation. And again, it basically comes down to, and this is what I think is going to happen, we're going to see more upward movement. But it comes down to this, and you have to understand that global markets are dealing with a credit debt issue. They're struggling with the strength of the U.S. economy, the strength of the U.S. consumer, and the fact that they're not benefiting from the rally that the U.S. markets are experiencing. And that's something I think that is going to continue to plague the first half of this year in 2025, which is why I think we're going to be rolling more into a sideways consolidation. And I mentioned to you guys how this reminded me of 2018, okay? Rolling into a kind of a sideways consolidation, moving through a channel kind of like this after the beginning of the year, moving more so into some sort of a rally phase near the middle of the year, which would be the end of the year here. I think the Fed um, kind of gives in June, July, August after we see moderately extreme pressure build up in the global markets, moving interest rates downward and setting up kind of a nice little rally phase back out of this. And again, could be somewhat similar to like this type of a move, rolling down, having the Fed kind of give in, and then moving into some sort of a rally phase. I think that's kind of where we're at here. And I think this sideways move is going to play out into this July, August area, moving kind of into, if I were to give you an idea, yeah, we're going to be moving up and down in these cycle ranges. But I think we're going to be moving into a broadening trend right over here. In other words, we're going to break this channel right over here, and we're going to move into a broadening upward trend right around June, July, August, and start to move upward. So this gives you an example that yes, we have this pullback. Yes, we have this consolidation. Yes, we're likely going to be moving into this type of a channel. And yes, we're likely to probably stay consolidated into this range, meaning this range here, actually down to this area, for the next 4, 5, 6 months. But I see that as very, very healthy for the market, leading to a big recovery rally in the second half of 2025. Now, lots of people are already telling you that, that the markets are collapsing, that this is the end of the world. I'm getting emails about them. I'm getting YouTube messages about how everybody is saying this is the end of the world. I don't believe so, guys. I believe this is the beginning of, and I've told you about it. So I'm going to come back over here to monthly, and I'm going to just tell you that, and clear some of these, clear my drawings. I think we're looking at a very, very solid move here. And it's fairly simple. And the way I count it, the way I experience it, from this low, which was a major low, I'm counting all the way up. Basically, this being, I'm going to just take a look here. So we have A, B, C, D, E. Yep. So let me do it the way I do normally, which is A up to here, B up to here, and then we have our C. Sorry, I'm doing that wrong. So this was C. A, B, C, D, E. Okay, now I know that a lot of you guys can count this any way you want, but I count this as a substantial pullback simply because it has pulled back. If you take a look at from rejection point to rejection point, it had pulled back 382%. Okay. Now, I count this as a substantial pullback from this point to this point because it had pulled back more than 25%. Now, you could come down here and argue, but Brad, this pulled back more than 382%. That's fine. Let's assume that you want to argue that this is the top of C. It would still mean that we have a D move that is going to be at least this move or higher. And you can see we're already there. But if my analysis is correct, and this is actually the peak, because remember, this was a disruption. This was the COVID event. This was not a natural market move. This was a uh, let's call it man-made. I mean, I'm not saying the virus is man-made. You can have your own opinion. I consider this a disruption that is an anomaly. So if we then move up to here and call this C, and we come back over to try to see what the D move is going to be like, we're looking at a D move carrying all the way up here to 720 at a minimum. Okay. So now, given where we're at, and given what I think is coming, I think we're in this D move here. And I think we're looking at a series of A, B, C up, possible D pullback, and then an E move up into this area. And the way that would work is we would have a move roughly equal to this from the pullback low, which hypothetically is here. And that puts us right at the 754, 755 area. I'm going to mark this 755. Now, you can believe the doomsayers who are telling you the world is going to end and we're going to see this massive pullback right here. Everybody's basically warning that this is going to be the end. And I need you to understand that if this is going to be any type of a 1920s style crash, you're going to be looking at a 90, let's call it a 75 to 85% pullback. So, we're already at zero here. Now, let me explain to you what these guys are basically saying. You're going to be looking at a 75 roughly here to here type of pullback to 80 some percent pullback. You're talking about the SPY going down to 100 or 150 is what these guys are basically talking about when they talk to you about this massive crash. And again, I'm going to come over here and I'm going to show you. I don't believe we run into anything like this. I don't believe it's going to happen. I think we're dealing with this. Let me see if I can find it. We're dealing with this. I've shown this to you before. This is basically where we're at right now. We're moving into a high price cycle. We move into a low price cycle right over here, basically 2031, 32. And I think this is where we're going to move into our low price cycle. Now, look, this was the crash cycle that took place in 2009. Okay. This was the peak, took place after 29, this is 1995. follow 1995 up. So we're going to be about 1999. Then we move down here to 2003, roughly, our base bottom. Then we move into a rotational cycle here, up into a peak around 2007, 8, move down into a rolling low around 2010, 11, roll up to a peak around 2018, 19, move into a brief low, 2020, pretty much roll sideways until where we're at right now, which was an inflation driven rally. And it looks like we roll into a peak around 2027, 2029. Sorry, it's more like 2030, 2029, 2030. And we move back down into that base bottom around 2031, 32, 33. So, historically, guys, when you come back over here, you start looking at this. So let's come here and get rid of this. It's kind of interesting when you take a look here and you say, okay, peak, moving from a low cycle in 1986 through roughly 90s. We don't have data going back that far. Rolling into a low cycle, then running into a peak cycle over here at around 1997, 98. Looky here, peak cycle, 97, 98, rolling right around here, rolling up into our peak, approximately 2000, 1999. There's our peak. Then we roll into a low around 2002, 2003, right there. There's our low. Then we roll into a peak cycle right over here, about 2003, 4, 5, 6, maybe 5 or 6. Roll into a peak cycle right over here in this area. Then roll into a low cycle in 2000. It looks like 10. I got to do the math here, 10, 11, 12. Move into a low cycle right over here, 10, 11, 12. And then we move into a high cycle around 2019, just before COVID. We run into a high cycle right over here. Then we run into, it looks like, a low cycle around 2023 or 4, which is our low cycle right over here. And then we move into right here, secondary cycle into bottom in 2024, 2025, which is again right over here. And that again is the cycle price setup. So if my analysis is correct and we're loading out of this cycle low, moving into this cycle high around 2028, 2029, that would put us, boy, everybody's messaging over on my Discord. So 2028, 2029 would put us up near this peak somewhere over in this area. So again, rolling down off of this low, up into this peak, rolling right over there in that area. And like I told you guys, I don't see this massive collapse. What I see is a fairly moderate sideways pullback, maybe 8, 10. So maybe from this point, maybe down here, 12, 13%, somewhere potentially down into this area, maybe a little higher. And then we move up into this rally phase. And this next rally phase could be another 42% or so to the upside. And that's all based on these cycles. Then we run into a very volatile period, setting up a major event. Now, these major events, I need you to understand, these major events correlate with broad wars. Okay. At this point, this was the Hungarian War that took place. This was the World War II. And now I have a feeling that we're going to be looking at some very big uncertainty back out here in call it 2047. And, we'll see what it is. but we go through these big, broad events. And the last time we went through that was in the 60s. And if you come over here and you take a look at the Dow Jones, uh, auto scale, all the way back into the 60s. So you can see here, we have this rotating mode, right? You can see here, up, down, up, down, up, up, down, up, down, up, into this peak. So you can actually go back to this 1920s, which is 20s, 30s, 40s, and then up into the peak. So 20s, and then we get into the 30s, which is the 1929 crash right around here. So here you go with that same kind of rotation. You're getting from 1920, roughly here, you're getting this up, down peak. Okay, and then we get this peak rolling, and that peak is 40. They'll come through here, over here to 40, and there we go. So we roll into that peak, into the 40s, and we get into the war right in this area. Now, come back over here through the 60s, we get that up, down. That's from 19, call it 63 through 86. So we come down here, and here's what we're looking at with this rolling. 63, so rolling up, down, up into this area. And that basically covers this. That's up, down, up, rolling into this mode. So I'm believing that this up, down, up, as we move into 2027, 28, 29, 30, I'm believing that what we're looking at in this mode is more like this. We are going to be looking at a rolling, as I consider this wave 5, I consider this wave 3. We're going to roll into this sideways flag, like I told you, move all the way up, find our peak, and then from this point forward, we're going to be rolling into moderately broad consolidation all the way out here until 2037. So I've gone too far. Let me try this again to 2036 or 37. And then we're going to move into the 42 and 43 into some broad event cycle, which could potentially be war or conflict. So that's going to come roughly right over here, in my opinion, around 2049. So right over here, somewhere in this area, 47 through 49. And you can call me Nostradamus or whatever you want. I'm doing all this research to try to help you and help you trade through this. So you have to remember that if my research is correct, we're looking at new highs, moderate pullback after 2030, maybe 2031, possibly back down into this 32,000 area. How big will that pullback be? Well, I don't know for sure, but I could guess that, again, looking at this data, and again, looking at these lows, I want you to understand something. Price is the ultimate dictator of everything. So if we were to look at this as a high and this is a low, potentially we would be looking at this 382 and 50 level as a solid pullback level. Maybe just this 25%, but more than likely these 382 and 50 levels. Okay, this is a 38% and a 50% pullback. That would be logically my estimate for the pullback. Then we would be looking at an extension. After this event here, we would be looking at an extension that is equal to what we have basically from here on up to here. Let's assume we get down to this level. We would be looking at an extension moving all the way up into this 1.0 to 1.5 area moving forward. And that would mean the Dow would rally from 42,000 up to 103,000, possibly in your lifetime by roughly this post time frame. Meaning, once we hit this low and we start to rally back out of it, now you're starting to talk about target levels up here, which again may end up actually being even higher because we expand. As the Fed expands and data expands, you could expand easily up into these other levels way up here, 140, 150,000. And why? Why does the market just keep going up? Because people are programmed to go up. So that's what happens. I got to be cautious of the time here. Okay, let me drag this out of the way and this back over here. And I didn't want to waste all of your time on this. I wanted to really go over some data. We're getting a pretty solid rally phase. News is they've come to a deal in Gaza. This is very positive. We have clearly rejected off of this low down here, which I talked about. Very healthy right now. Crash index, as I mentioned to you, is moving higher. Very solid. You can see here really no warning of a potential crash here. I know it looks difficult for people in Canada and other areas because of the pressure that the Fed is putting on the market, but as long as the belief that the U.S. market is capable of handling its debt and moving forward, it is the strongest economy on the planet. I think we're going to continue to see strength in the U.S. market, U.S. dollar, and global capital rushing into US dollar based assets. But at the same point in time, gold and silver are acting as major hedge instruments right now. And if you follow my research on gold and silver, you're going to see that, I'm targeting 4,800 to 5,500 on gold, almost 100% increase. And that would put silver up in the 60, 70, 80 range within the next like year and a half, 2 years. So if you follow my research and you want to learn how to stay ahead of these markets, please check out what I do. Follow me on YouTube and oops, sorry. Follow me and let's try to make some money together. That's what it's all about. Before I leave this planet, I want to help as many people as I can learn to make money. And like I said, this silver move here, it's beautiful. I called it. My options are up 240% right now on this silver trade. Beautiful, beautiful move. So again, if you're looking to try to, find a way to improve your trading, I'm here to help. I really am. I'm here to help. Okay, guys, talk to you later.